Hi guys, welcome back. If you are new here, welcome to Green Forex Academy. In this video, I will be showing you how to identify and trade accumulation and distribution phase in Forex trading. Here, you will understand the stages or structure of the market. If you haven't watched my video titled How to Trade Like the Banks, please do, because it will help you understand this video lesson better. Now, talking about accumulation and distribution phase in Forex trading, this is one big factor, one key factor helping bank traders, fund managers, hedge fund managers, etc. The top 5% traders, the profitable traders out there, they do all understand how to make use of the accumulation phase and the distribution phase. Now, this is the difference between the amateur traders and the beginners in Forex trading, because the beginners in Forex trading or the amateur traders, they do not understand the structure of the market. The market has phases. The market move trending, ranging, trending, ranging. And I will prove to you, you can see from this point, the market went down. The market was trending to the downside, right? Then the market ranged for a point, to a certain period of time, the market was ranging. And after ranging, the market trended to the upside. And after trending to the upside, the market ranged again. And after ranging, the market started trending to the downside. So this is the structure of the market. The market always move trending, ranging, trending, ranging. Now, when the market is ranging, this is what traders or people out there call consolidation. When the market consolidates, we have sideways narrow, sideways volatile. When the range is narrow or when the range is wide. So these are all technical terms on how to analyze chart. But if you understand these key factors, it will help you to be on the winning side. Now, the professional traders, the profitable traders, the top 5%, they do understand this, and that is why they call the amateur traders, they call their money dump money. Dump money. If you listen to Forex trading news, sometimes when some people are talking on an interview or they're talking, they say, when is the dump money coming? When is the dump money coming in? And I'll prove to you in this video what they meant by when is the dump money coming, because they know exactly where they need to go into the market with the concept of accumulation phase and with the concept of distribution phase. So they know exactly where to go in. They know where the amateur traders will go in, and they know where they will go in. So at the end of the day, they have an edge over the amateur traders. They have a secret over amateur traders. Traders who are making money in the market is because they know the structure of the market. They know how the market moves, and that is why they know where to go in and where to go out, how to make money from the market. And that is the edge that the professional traders have over amateur traders. So now, how do you identify the accumulation phase or distribution phase? I will start here with the accumulation phase here. The accumulation phase here, right? So as you can see, we have the accumulation phase. The way to identify the accumulation phase is to make sure that you observe that the market is on the downside. Make sure the market is on the downside. Checking the market from this point, you can see the market, it's on the downside, right? Market going down, downtrend. So now that we observe that the market is on the downside, what you need to check, the next thing you need to do is to make sure that the market create two lows or two highs, just observe that the market is ranging. If the market start consolidating, then you want to connect two lows or two highs. That way you will watch and see what happened. Now let's try to connect these two lows and two highs here, right? So let's connect these two lows and two highs. Yeah, so let's say we connect this line here, right? Let's say this is a low, we're connecting this low, and then we're connecting high here, right? We're connecting this high. So here you can see there's nothing perfect in Forex trading. Some people like looking at the top, the edges. You place your resistance and your support where you have the market touching so many times. Like you see here, we have the market bounce here, the market bounce here, the market bounce here. So this is the way to draw a support. This is a support line because it touches 3 times, right? This one broke through the support and then came back in. So here we have the market bounce here, the market bounce here so many times. So we have our resistance line here. Now let's say here we have resistance, right? R for resistance. And let's say here we have S here for support. So we have support here and then we have resistance here at this line. Now the concept of accumulation is after a downtrend, the professional traders, the top 5% traders, the hedge fund, the bank traders, they are not doing anything at this moment because the market is consolidating. They are not trading. They are creating the market, just like market makers. They create the market. They allow people to jump in enough. And when people jump in enough and they see that they have created market, they have created liquidity in the market, that is what they call dump money. Then they take advantage of what they know and when to go into the market. And at the end of the day, they go in and make some money. So here we have 2 points here. What they are looking for to do is to make sure that they enter the market somewhere around here, or somewhere around here. Okay, professional traders, some go into the market at this point. I mean, they go in at a little bit high rates and they go in here like really low rates because it has broken out of the resistance. Now, when we're talking about breakout in Forex trading, this is what you can call a breakout, right? It is possible that the price might just move to the upside and bounce, something like this. The price might just go this way, come back, bounce under resistance, and go up again, right? But just mind you to know that most professional traders go into the market at this point and then or at this point when it is broken, the resistance line is broken. So how to identify accumulation phase is to make sure that the market has been trending. How do we know here that the market has been trending? Because the market create waves, different waves to the downside, right? If we look at this point, we can see the market went down, market went up, market went down, market went up, market went down. So we can see that the market was creating waves, and with all these waves that the market created, at the end of the day, the market start ranging because we have the market bounce here, the market bounce here, the market bounce here, we have a resistance here, we have resistance here. So that's why we have a resistance here, we have a support here, right? So we can see at this point, this is how the professional traders, this is how they trade accumulation phase. They buy from this point or from here and they ride the wave to the upside, and then they make profit. And what happened? I said the market had different structure, right? So at this point, if we look at the first concept here is the market was going down, 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 down to this point. Then the second phase of the market here, which is ranging, the market is consolidating, which is called the accumulation phase. And now that the market is accumulating, at this point, you can see we have a low here. We have another low here, but this low here is higher than this low. So this is an indication. If you're using MACD divergence or RSI, you will understand better. But in my future videos, I will explain about this concept. So now here there's a sign, there's an indication that the market here is pushing to the upside, right? If you use filters, you can confirm this. But even without using filters, this is pure price action trading, and it works even without using a filter, because the traders, they know where to go. And the professional traders, the top 5%, they are waiting for the market to break. And those who want to take more profit, they go in at this point and then they put their stop loss just somewhere here, because the market has come to a point where it has to trend again. Because after trending, the market range, and the next structure, the next move is for the market to trend. And after the market trend, the market is going to range again. And after market range, the market is going to trend. So it's trend, range, trend, range, trend, right? For you to understand clearly. So now if you buy here, you are buying with the banks, you're buying with the top traders, you are buying with the traders who are on the winning side. And sometimes amateur traders luckily jump in at this point without even knowing that they are buying with the bank traders, or they are buying with the top 5%, and they make profit and they are happy. But because they do not know and they do not have the knowledge, it's difficult for them to understand that this is the edge that the professional traders have over amateur traders. And because most of the amateur traders, they do not keep trading journal, some of them or most of them do not even have a trading plan. So they don't even understand that what they did yesterday, they have to repeat what they did yesterday, because that is a key factor. That is something they are supposed to be doing. That is something that will make them make profit. It's something with an edge. So they keep trading anyhow. Why? Because they don't have trading plan. They don't even know what they're doing. I'm talking about the amateur traders, the beginners in Forex trading. But for those who are professional traders, or the top 5%, or the hedge fund managers, or the bank traders, institutional traders, they know exactly where they need to go into the market. So sometimes when the market is ranging, they don't trade. They don't do nothing. They just stay out of the market. They wait for a certain place in the market, which is here. If they are trading accumulation phase, they will wait for the market to break the resistance, and they will go in here and then make money from the market. Now, how do you trade this? We are using New Zealand USD daily chart here. Now imagine you are trading 4 hours or daily candles. What you need to do is to use a trailing stop. And then when you use a trailing stop, you will trail your profit to the upside. You will trade your profit to the upside. And then you will see that if something happened in the market, at the end of the day, you have nothing to lose, because your trailing stop is going to take you out as you make profit to the upside. To the upside in the market. As you make profit to the upside, you will see yourself happy, because the trading stop is going with your profit. And if something happened, if the market start retracing, then you see yourself go out. Just like this point here, we have the market going down from this point, right? The market went to this high, and then the market went down. Imagine you are using a trailing stop. Your trailing stop might just take you out somewhere here, right? So it is very important if you are trading 4 hours or swing trading or daily candles, try to make sure that you use trailing stop to trail the market, and that way you will make money from the market. You will see yourself be on the winning side. You will see yourself making money from the market, because the way to go is to trade like the banks, is to trade like the professional traders. That is the way to go. And if you do that, you will see yourself making money in the market. All you need to do is to obey the concept, trading the accumulation phase and trading the distribution phase. If you know how to trade these two phases, you will see yourself making money from the market. This is how professional traders trade. If you understand this, you will see yourself making money from the market. Now, let me go back to the older phase. Now that the market went down, the market ranged, and you can see a sign with this higher low that the market is even pushing to the upside, and now we have the market break the resistance, and now professional traders are making money in the market. Now what happened at this point? There's another phase. Like I said, the first one is to see the market go down. You observe that the market is ranging. Then the third phase here is to see that the market is creating a higher low, is pushing to the upside, right? Now, the fourth stage is to see that it has broken the resistance. This is like the fourth stage. Now, the fifth stage is to see the market moving to the upside, trending again. This is where you make market. So this is just like 1 to 5 phases of the accumulation phase and 1 to 5 phases of the distribution phase. So, right, let's just go straight, since we've talked about the accumulation phase and how to trade the accumulation phase. Let's go straight now and talk about the distribution phase. Now, the distribution phase, it's a phase where if the trend is on the upside, the trend is on the upside and you want to make money from the market, all you need to do is to understand that you are trading the distribution phase. If you are trading the distribution phase, I repeat, you have to make sure that there is a trend to the upside, trend to the upside. And now after trending to the upside, you have to make sure that the market range, right? Range. Now we have to check again. This is a range market, right? So let's make sure that it's ranging. So let's draw. Yeah. So we can see here again that we can draw another line here. So we have the market pushed to the upside. We have the market ranging. Right? If we can see at this point, we can see at this point here that you can see from this point here, you can see, yeah, you can see from this point, all this point here is showing where the market tests the support and resistance and proven to us that indeed this market is ranging. Because we have tops and we have bottoms, right? So with the tops and the bottoms, we already know that here in the first phase here of the distribution phase, the market is on the uptrend, and now we have identified resistance and support, right? Resistance and support. So here, let's say we have resistance, right? We have resistance R, and then we have support here S, right? So just like resistance and support we have here. So this is the first phase going up. we identify resistance and support. This is the second stage. Okay, so the second stage is we identify this. Now if you look at this high here, and then this high is lower than this high. This is a sign, because the market change start going down here. If you look at this red candles, the market change going down here. So this high is lower. This is a higher, lower high, right? So it's lower than this. Now you can see this high is lower than this high, right? So at this point, we are observing that the buyers are weak. The sellers are taking control of the market. The market is changing to the downside. Now, this is the third stage. The first, to the market trending. We observe the market is ranging. The third, we observe now that it's weak. It's getting weak. Now, the fourth thing to observe is to make sure, the fourth stage is to make sure here that it has broken. Like I said, some traders, they sell from this point. From this point, they sell and they put their stop loss to the upside, while others, they sell from this point here. Now, this point here, this point, or they sell from this point. So you can either sell from this point or you can sell from this point. Those that sell from this point, they will make more profit. And those that sell from this point is like trading low risk, high reward. Because if you sell from this point, it is possible that the market can keep ranging. But selling at this point, it's like saying at this moment, after the market trend, because this is the structure of the market range, and the next thing that's going to happen here, the market is going to trend. So you can see that at this point, the fifth stage is where the market start trending. So number one is like saying the market is trending. Number two, we observe that the market is in a range. And number three, we can say that, oh, this high is getting low. So this high here is an indication that is weak. The market is going to the downside. Now, this point, the breakout here, we can say this is number four. This is the fourth stage. There's a breakout here. And then we can say here, the fifth stage here is when the market is trending to the downside. You know, just like this one too. One, here two, and then we have three, we have four, and then we have five. Here, market trending to the upside. So let's just do it so that it can be clear to some other people. So let's say here we say one, and then let's say here we observe the market is trending, ranging two, and then here we have a higher low. So here we have three, and then here the market break. So we have four, the stage, and then the fifth stage, the market here trending to the upside, trending up. So right now we're talking about downtrend. We're talking about downtrend here, trending to the downside. That's where we are, because we're talking about distribution phase. Because we've talked about accumulation, so we're here talking about the distribution phase. Now, if you follow this stage, 1, 2, 3, 4, 5. Now, the next thing that will happen, you will see from this point, the market will start ranging again. This is the concept, right? So you can see here what happened. Now, the market dropped down. Now the market pulled to the upside, which is normal, and the market start going down. And at this point, you can see that at this point, the market is weak. At this point, the market is weak, right? So from this moment, the market will start creating, the market might just start ranging at this moment to this side. So how to identify accumulation phase, how to identify distribution phase. I hope that you understand clearly how to trade the accumulation phase and how to trade the distribution phase. First, we talked about accumulation phase, right? How to trade the accumulation phase, right? If you know how to trade the accumulation phase first, then you will understand how to trade the distribution phase. So there's nothing different. It's not different. It's just an inverse of this. Just like the video on the head and shoulder, we have the head and shoulder, and we have the inverse head and shoulder. So this is accumulation phase, and the distribution phase is the inverse of the accumulation phase. So if you see a professional trader talking about, I'm just waiting for a certain level to be broken in the market, then I will jump in and make some money. Sometimes professional traders, or the top 5%, they say, yeah, my strategy won't take you 15 minutes to set up. What they are trying to communicate is, it doesn't take time, if you understand how to trade this, to observe that the market has broken out. And when you have a breakout, a real breakout, then you can make money from the market. Now, the fake breakout, what really happens sometimes, the people don't understand, but I'll be talking about this in my future videos. But let me just give you an example here. The fake breakout will be you seeing the market from this point going up, right? Like I talked about here, there's a chart pattern. This chart pattern here going up this way is a flag, if you know what a flag is. And now if you have a flag here and the market is going up to the upside, and then you're happy, you say there's a breakout, and you jump in from this point and you start buying. At this point, the market might just push to the upside a little bit, but at the end of the day, the market will drop down. The market will drop down. So this is where fake breakout happen most of the time, and traders, they don't really understand what is a fake breakout and a real breakout. If you understand the structure of the market, that's when you will understand fake breakout and real breakout. So fake breakout, be careful, because when the market gives you that sign of a fake breakout, a false breakout, the only way you can identify that is if you understand the structure of the market, or if you understand how to trade accumulation phase and distribution phase in the market. That's the only way you can understand how to avoid false breakout. So this is how to trade accumulation phase and distribution phase, and I hope that you have learned something in this video. And if there's any question you have, if there's anything here that is not clear, you can ask in the comment box, and I'll be glad to respond to your questions. And if you don't have any system working out for you, you can apply this price action strategy, and I bet you will see yourself stepping up with your trading. You will see yourself taking your trading to the next level. And like I say, if you haven't watched my video titled How to Trade Like the Banks, you can check my YouTube channel and watch that video. You will have a better understanding of how to trade like the banks. Trading like the banks mean understanding the market structure, how the market move, the market trends, the market range, the market trends, the market range, the market trends, the market range. So this is how the market move, because you can see the market is on the downside here, range to the upside. And now what happened? Again, to the downside, right? You can see at this point, now the market went to the downside. So downside, range, upside, range, downside, Okay, and now you will see a range again happening. So this is how to trade accumulation and distribution phase in the market. And I want to say that I wish you guys success in your trading. And if there's any question you guys would like to ask, I'll be willing to respond to your questions. If you learned something from this video, please click like, share with others, and do not forget to subscribe for more videos. Thank you.